While the process is simple in theory, in reality, it can be a bit, well, tedious and frustrating. Software will help with both of these, and we'll look at that in another lesson. For now, I want to share with you a solid approach, leading with the balance sheet. One of the best practices for reconciliation is to use the balance sheet approach. This simply means reconciling all of the accounts listed on your balance sheet each month. Just like the overall reconciliation process, the steps for a balance sheet approach are simple but can be time-consuming. Let's hear what another expert has to say about this approach.
The balance sheet approach to reconciliation really is talking about the balance sheet itself. You're looking at the balance sheet, it has balances listed month to month, and you want to make sure that each one of those balances has been reconciled or tied to an outside document. The way in balance sheet is interpreted is going to tell the client how healthy their business is. And if those balances are not correct and verified with an outside document, row by row, you really have no way of interpreting that financial statement for them. One way that I've found that the balance sheet approach really works, and that's meaning going through all the bank accounts, all the savings accounts, all the credit cards, all the loans, everything, get through there and make sure everything has an outside document. I found that a client once really didn't tell me that they had a loan on a vehicle. And I got everything reconciled, but then there was something missing. I noticed in the bank that there were payments going out to a loan, and I had to have the conversation with the client. What are you paying for? Is this personal? Is it business? What was it? And then, oh gosh, we were missing an entire auto loan on the balance sheet, which was skewing their ratios as far as assets to liabilities and what their equity was. So it's really, really important to go through row by row through that balance sheet, ask those questions. If there's transactions that you're reconciling out of cash accounts that you don't know what they're for, you really need to dig into that. And maybe you would find a loan or something else, a line of credit that they have that was not on their books yet. So the entire balance sheet tells the entire story. Reconcile it row by row.